Hello, traders. It's 8:03 a.m. Chicago time on Wednesday, the 18th of November, 2020. This is episode number 1882. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overnight action so far shows risk on sentiment. With crude oil again leading the pack, 42.21. I want to remind everyone that crude oil has rolled to January. That will be the F1 contract, F as in Frank, 1 contract. The premium difference is 22 cents plus 22 cents. Crude is in contango. Crude January WTI trading at 42.22, up 57 cents or $1.37 versus yesterday's settlement. The Dow is up 115 points, and the Euro stocks and the DAX follow, with the bonds also up 15 ticks, and the Russell up $4.60, trading at 17.97. Russell near highs still. The S&P 500 up 6.5 points. So slightly risk on sentiment today. The NASDAQ is a bit of a laggard today, only up 3.25 points or 0.03%. In what looks like a triangle formation in the NASDAQ as it winds up, or is in balance as it winds up for the next move, with an overall trend up in that product. So that's where we stand this morning. In terms of the calendar, we had the Great Britain inflation rate year on year this morning came in line at 0.7. There have been other releases and speakers. Housing starts, building permits came out in the U.S. Came out strong. Well, housing starts came out stronger at 1.53 million versus the 1.445 million. Building permits came in a little softer at 1.545 million versus 1.56. We have Fed's Evans at 10. We have the EIA crude inventory numbers at 10:30. And then following that, we get Fed speakers, Fed's Williams at 12:15, Fed's Bullard at 1:20, and Fed's Bostic at 7 p.m. The ECB also has its non-monetary policy meeting. So that's what's on the calendar. What's driving us today? This morning, Pfizer ends COVID-19 trial with a 95% efficacy rate to seek emergency use authorization from the FDA. Pfizer says that the final results from the late-stage trial of its COVID-19 vaccine show it was effective at 95%. Now remember, 2 days ago, Moderna came out and put out its results, stage 3 results at 94.5. So I guess this is better. Adding it had the required 2 months of safety data and would apply for emergency use authorization within days. Also, Boeing is in the limelight with its the U.S. approves the 737 MAX to return to service. Remember, the 737 MAX had a mechanical or programming issue that resulted in multiple crashes and fatalities. And so on. There's still the issue of the election and the concession of the election, the fight in court, which is so far not yielding any fruit for POTUS. So that's looming overhead, but overall the market's paying particular attention to the COVID results and the fact that this wave of infections and the numbers are leading many states to lock down, also many countries in the European Union, and that's likely to have an impact on productivity, earnings, and so on in the United States and across the world. Canada is also running into issues as it's putting more and more constraints. So that's where we stand overall. The market is really near highs, still near all-time highs, but has been in balance and holding sideways as a result of these unknowns. It has not given up any territory and hasn't sold off. So that says that there's relatively a decent strength here. given the factors in play. So we're waiting around for further good news to release the upside, and that's what it looks like we're doing. What are we looking at in terms of the review segment? Yesterday, the primary scenario was looking for a push to 06, was looking for it to kind of move up and then drop into 90 with a target of 81.80 before the bounce. This is the primary scenario. This played out very early on. If you blinked yesterday, you pretty much missed this move. We opened a little higher than what was expected off of the trader bite scenarios, but we went to 36.0250. Couldn't quite make it to the 06, which was value low here. Couldn't quite make it to the 06 before it turned over. Pushed to 90. Pushed to 90. You see the 90 here for a nice bounce to the mid. Right there, nice bounce to the mid, and then it continued. It stopped at 84.25. I really was expecting a test of the settlement price or the closing price from Friday. Really surprised that it would go into the prior day's range, or the range, not prior day, but what was it, Friday's range, and not hit the settlement price at least. So I was really gunning for a pullback and a continuation. Another play just like these three lower highs. I expected these zigzags to continue lower, and it did not. It ended up pushing through, coming back to mid, consolidating, coming back to the prior day's low right here, and this sets up a push higher. You can see this tight zipper consolidation. This set up a move back into the range, and in that case, if we're back in the range, then we are likely to hit the high volume node. This was where the point of control was, and then the point of control if we exceed the high volume node. So longs would hold and look for a push into 2075. And what does it do on the other end? It goes and stops 2 ticks ahead. So scenario 1 ended right here. This was scenario 1, and we basically went into scenario 2 right up here, and stopped just short by 2 ticks. Did not get to the single prints at 23.75. It stopped 2 ticks ahead of the point of control. You would expect it to touch those, and it just consolidated sideways. We finished the day with the point of control in the middle of the range. We did have a range extension up only, so we did not have a neutral day. We broke the IB high. The IB low stayed intact. Remember, the IB stat is around 97% probability that one of these yellow lines, or the first hour's high or low, will likely to be broken by the end of the day, and the opening swing also will likely be broken at some point in the session. Not the opening swing, the overnight high or low will be broken by the end of the session, historically, 98% of the time. So what do we end up with? We end up with a point of control that's pretty much dead in the middle of the range. The mid is down here. The VWAP is right there with the point of control above. This area between 3607 and 3600, this area here becomes a block to watch for today. We're trading at 3612 currently. So this area here is likely to generate noise again, as it did yesterday. So pay attention to this area as we come into the session, and we'll see how things pan out. In the overnight session, let's move to the overnight. The overnight session was pretty lackluster in terms of volume. Given the range, it pushed the overnight session, put in a higher low versus yesterday's low, put in a higher high versus yesterday's high. Remember, yesterday turned to 2075 with the overnight session going to 3630. It did so in one move, basically, from the European Open. It continuously pushed higher. There was a very deliberate and clear rotation up of about 40 points or so, a little shy of 40 points on just crap volume. 40 points covered, and all we did was 200,000 contracts for the session. At least with this particular play, we do have some delta support on the way up, and you can see with the Pfizer news here, we got a little bit of positive delta pushing us through the high right up in here. But we did manage to get to those single prints at 23.75. We stopped 2 ticks short. We're in a 2 tick world these days, despite the thinness of the market, and we're holding above VWAP, above mid, with a point of control just in this area. The today's opening is expected to be somewhat noisy. We're in the middle of the week, and really we haven't accomplished very much, to be honest with you. I mean, we opened the week on Sunday night here, and that's been the low. And we put in a high on Sunday night here, and that's been the high all week. So, you know, you would expect it to kind of get beyond 37 on the upside, or at least get below the 86.5 on the downside. Yesterday, it got to 85.75. Just below 85. I think it got to 85 and a quarter, something like, or 84.50 was it? Let's see. Yesterday, 84 and a quarter. So we've been trading the last 2 sessions in the range of Sunday night's announcement, and we haven't done anything. So the market has not priced in anything in 2 days. And what we then have is this market that's in a consolidation. It's in a kind of a wedge formation, and it's likely to move out of here quickly. So in general, historically speaking, for the S&P, statistically speaking, the first standard deviation of range on a weekly basis is about 54 points historically. This is going back, 10 years of data, is about 54 points. We covered about 40 in this move here. Lately, we've been doing about 100 points a week. And if we stick with the current volatility and the more recent statistics, we have a lot of range left, in that we've only covered about half the range, and today is the middle of the week, the start of the middle of the week. So looking for this consolidation to work itself out. The troubling thing here is that every time we move up, the delta is not really coming with us. Here's a move higher yesterday. Delta totally negative. So it's been selling off. It's been selling off on the overnight. It sold off on the overnight yesterday. It sold off on the overnight the day before. So the day before and yesterday, and overall the delta has not been participating very well. In other words, there isn't aggressive lifting of the offers as the market is moving up, and there's some aggressive hitting of the bid as the market moves down. This looks to me like there's some distribution going on as we move into higher prices. What does that mean? What am I talking about here? What that means is the participants in here are likely to want to move price lower to bring in more buyers. So if buyers need to come in, we need to advertise lower prices. That was expected into last week. As you can see here, last week was also pretty tight. That was expected into last week. Last week we had the Monday move, and then for the rest of the week we didn't do crapola. I was going to use a different word, but maybe kids are around. We didn't do anything Tuesday, Wednesday, Thursday, Friday. Look at them. We've been in a box since the Moderna or the Pfizer announcement. There's the Pfizer announcement. And then last week we just stayed below that. And then we come in with Moderna right here, and we put in a lower bracket on the Moderna news versus Pfizer, and then we've been kind of sideways. So we've moved from one big zipper, pop, up, 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 pop, up, down, pop, up, finish strong. Remember, we finished strong with a high of 90 and the closing price of 81 and a quarter. That's the price we wanted to test yesterday. We wanted to see tested yesterday. Then we have a break higher, and then we test lower high. We test up. So we put in a high, lower low, lower high, higher low, higher high. And what we have here is a zipper, a large zipper that has moved up. This is likely to lead to a strong move up from here. So what do we do from here? We draw a composite. We draw a microcomposite for this region to find out where the balance point is. So there it is, 35.57. It's marked, if you are a Convergent member, it's marked on your charts with the MCV-POC at 35.57. So that's the big magnet, and I talked about this the other day. If we break back into the range of last week, 35.57 becomes a big target, and yesterday failed us. It got below 90, which is the range high, and it just couldn't get into 81. If it had gotten into 81 and started to give up the 81 up here, then we want to get short into 57 and hang on tight until the wheels come off, right? That's the setup that comes in. Given the performance of this week, we're going to draw another profile up here. And the point of control is 3608. If you recall, yesterday, the point of control was 3607.75. So yesterday, the point of control remained, and it's part of that equation, part of what I'm showing you here. The point of control is basically right on top of the middle. And look at this profile. How beautiful is this profile here? Very sharp kurtosis, or very sharp tightness to it. It's very well distributed. I'm telling you, this is really building some energy, building some volume. Volume is energy in trading, and it is likely to dissipate one way or the other. So it's either going to run through and push the day high from the 9th at 45 and a quarter and push into 68, 36.68, which is the high on the Pfizer news, or start to break down into last week, in which case you want to remember that 35.57 is the place that is likely to be tested. You want to hang in there if you can get some risk cover by scaling out. That's the big picture. That's important stuff. I hope you captured all that. Let's dig into what's expected for today. I'm just going to grab a sip of tea here. 1 second. All right, so what do we have? Let's turn on our stock zones. Pretty wild session so far. Not too crazy, but a pretty decent amount of range. The overnight stat is likely to get stretched a little bit. Here we are at 3509. Remember, the point of control of this region is 3609. Here's the point of control of the region at 3608. We are back in balance on top of yesterday's point of control, right? And we had some pretty decent volume here. The prior day we did have our point of control up here, but we had some pretty decent volume, a high volume node down here, and we built on top of it yesterday, again building energy. We're building energy. So the expectation this morning is an open auction that is likely to resolve to the downside. The overnight inventory is balanced. I'm looking for it to squeeze down into the 3602 right here, 02. Okay, and then impulse up and then start working towards the overnight point of control. The overnight point of control at 14.5. This is the 14.5 right here. I'm getting a tablet, by the way, so I can write things. 14.5, expecting it to consolidate and then squeeze that 23. Have a hard time here, and then finally push up into the 29.30 and then fall off into the close. So a drop to attract buyers, right? Advertise price lower, look for buyers. Buyers come in, we get our impulse up, we get the consolidation, we get the impulse up, we get the consolidation, and then we get the impulse up to the all-important overnight high, expecting one of these to break, the 23 quarter or the 85.75 with a historical probability of about 97%, 98%. And then we expect it to kind of fight up here before it pops for a final splash and a push into that 30 area before it rests. This is what I expect the auction up to look like if it was unencumbered by news. The secondary, an open auction that just stiddles in the middle here, attempts to push higher, gets to 14, consolidates 14.5, and then we get our impulse down back at the open area, back at the opening swing low, and then we start to give it up, and then we get an acceleration in the delta. So the delta starts moving down and helping this thing accelerate and moves us down into the lower range. If this happens, we are not likely to get that 81. We're likely to see support. Why? Because we saw support as soon as it tested down into the 96.75. We saw support as soon as it tested into 84 quarter. These are V bottoms. There's your V bottom. Overnight, there's your V bottom, expecting that participation to come back in again and bring it above the 3600. Yesterday, it had a really hard time. Multiple times it gets below the 3600s. 3 times, I believe, it got below the 3600 and could not stay below it with some buying coming in. And I expect the same. I expect it to come back up once it tests below the 3600. But we'll see which side holds. So I'm going to watch very intently for the first 10-15 minutes. Are we getting good delta? Are we getting good lifting? What are the market on open orders doing, and which way is it pushing? I know this was a long trader bite, but there was a lot to cover because we are building energy towards the next move, and it's important to understand the context and not to stand in its way. Hopefully you learned something new today. Good luck, and I'll catch you tomorrow. Take care.